What's up, everybody? Welcome to the Friday weekly close live stream. I do this every Friday. I stream it on Discord, YouTube, and TradingView, my favorite, which is what I use for all my charts. Forgive me if I have to turn my head and cough to keep you all from catching whatever maybe variant of vid that I may have, but I'll get through it. Family wants me to go to the doctor, but I don't want to spend any money on something frivolous as my health when I could be spending it on 0 data expiration options. Far more benefit than that, of course. But anyway, I digress. So the topic I'm going to talk about today is some of these discussions that, well, I have them pretty much every week, but this week in particular I've had with some friends in various circles about how there is impending doom in the markets. And I'm not immune from this either. I mean, I think we all reach a certain point in life, i.e., not children, where we kind of worry about the future. And I think it amplifies as you get older. I notice this with a lot of Generation X folks, maybe some older millennials. And I have a few anecdotes. I'm not going to sell any of my friends out, but I think it gets hard for us to acknowledge change is one of the problems, and also really take in properly all this economic data that we consume on a regular basis, because we have to be informed in order to make decisions with investing. But how do we make sense of everything? And so I'm going to look at a couple of arguments that I'm hearing nowadays, and we're gonna go through it. I've talked about this in previous live streams. Last week we talked about the bull case for Bitcoin, i.e., anything. I've never met a Bitcoin hodler or Bitcoin maxi that had a bull case they did not like. But what does it mean to the stock market? What does it mean to equities? What does it mean to the economy? Because it's just so rote. It's just so common for people to talk about the impending recession. But I've been waiting for this recession for months and months and months and months. And by the looks of it, if we look now back at the last year, I'm looking at the ES, the S&P 500 E-mini futures, which I use to gauge the stock market better than the SPY, because this is actually more tradable. It's open more hours to trade. It's been going up. And the big fear of this year was, of course, back here in March. That was where Silvergate and Silicon Valley Bank were all failing. And a lot of people had this sort of "it's happening" meme, the Ron Paul meme going on, where they thought that this was going to be it. Finally, doom was coming. And yet what that ended up being, and what that should have been seen as a time, is the old Warren Buffett, be greedy when others are fearful. Because that was a pretty damn good opportunity to get into equities again in 2023 after the market turned based upon the October 2022 CPI. That's what this spike is right here. And to shill my indicator, even though I don't charge for it, one of the things that I really know and trust when it comes to technical analysis is looking for situations like the October CPI print, what it did in price action when it created a false breakout. Everyone thought that was going to be very bad news. But believe it or not, that CPI was a print that was less than the prior month, year over year. And we also had a CPI print this week. And that's why I'm going to make that a topic of discussion. Because I think because we had the CPI print and it went up just a little bit, Let's bring up the calendar here to take a look at it. That really got people talking about inflation again. It did. It did. Hey, what's up, Casey? Look forward to what you got going this week. Hey, Dave. How you doing on YouTube? By the way, guys, as I wrote in there, if you have symbols that you want to look at, please post them in the chat. Let's take a look at one of the. I'll get into that in a second, but one of the reasons that I do this live stream is so that we, you, me, everyone that is part of my Discord community or on TradingView comments, that sort of thing, can find ideas. We can't all look at every single symbol out there in the market, but a couple of weeks ago on my live streams, I've already got it marked off, but I believe that it was probably in the beginning of August, the start of August. Someone came on the live stream and said, "Hey, what do you think about Netflix?" And I already had, let me just clean up my notes here. I already had this 50% retracement level marked off, which is basically from the high in November 21 down to the low of May of 22. I already had that marked off from months prior. But by them saying, "Hey, what about Netflix?" it made me come in and recognize that, look here on earnings in July, it had spiked out. It had done this false breakout at the key resistance, which I love to see. This confluence of two key technical analysis factors are what I look for when I'm going to take a trade. And boom, don't want to start bragging about it yet, but I want to use it as an example of how using crowdsourcing ideas and then using the technical analysis that I like to use. I'm hoping that the person that brought this to my attention was also talking about this, but through the lens of those two factors, the 50% retracement and a spike, a false breakout, set up for a good 10% move this week, actually. I still want more, but I think some people have already taken profits on it. Good for you. But if your risk is all the way up there, close to 500, you really need to try to play for a retracement back down to 260. So that's a little update on that trade. But anyway, if you guys have ideas, make sure you post them in here. If you're catching this late, I do this every Friday at 4 p.m. Join Discord and post them in there. FTX coming liquidations. What do you mean? Are they going to start selling off some of their assets, Jeremiah? All right, yeah, get the chats in. I'll take a look at the symbols in just a second. Usually, what happens is I get deep into the weeds of these symbols, and I don't get to talk about my topic. So let me talk off the top about CPI this week, because that's what everybody's looking at. And let's face it, that is actually what has, in fact, over the last more than about a year. Well, more than a year, actually, because I remember the December from earlier. Well, since especially October of 2022, the CPI print has really moved markets. And we have one this week, and everybody's talking about it. And I don't think that they should be that concerned about it. And so, for example, this is the actual consumer price index. It's going to be a graph because it's the index. It's all the prices of things that people buy. Now, caveat is required that the Federal Reserve, when they're collecting this data, they do change the numbers. They change the weightings to sort of maybe fit their narrative that things are better than they really are. That's what the criticism is. But it is the data we have to go on. And so we need to take it with a grain of salt, but we also need to use it for our decisions, because people damn sure use it to paint the narratives they want to paint. Like this week, CPI was expected to, where's it at down here? Let me. This, by the way, one of the great tools I've used since I traded Forex. This is the Forex Factory Calendar. It's good for all the major economic events. So this was CPI, CPI came in this Wednesday, and year over year, the consumer price index, which is the Fed's measure of inflation, came in at 3.7%. It was expected to come in at 3.6%, which was an increase from 3.2%. We're arguing about 0.5% here, which is significant, but it's a far cry from the 13% that was in that October CPI report that turned the market back in October. Man, that was the turn, because let's go back and take a look at how impactful that was. Let me see if I can come back here. We're coming up on almost a year since that. Oh, wait, I went too far. It's really just 2022. That was, let's see, that week, apply. Right, so October, let me cross-reference. Okay, 13 was the the big old high. Why do I have 13 in my head? That says 8. So Thursday, October the 13th. Okay, so that was it. Oh, well, okay. I think 13 was what inflation peaked at. But this right here, this little small change right here, where it was expected to come in at 8.1, it was slightly higher. My memory may be a little off here. But that was actually the turn. What was the last CPI before that? When did I think it was 13? No, it was 8. It was around 8. So that was what the measure of inflation was back then. But that little CPI print, I think it came in better than was feared, and that ended up being the turn in the market. And since then, we've had CPI events. I believe this spike in December was another event, and then this week, well, the effects are much muted. But people have been talking about it again, and the reason they've been talking about it was because it came in slightly worse than expected. Let me go up here. There we go. So what does this mean? Well, if you ask people in, I would say, the cryptocurrency space or the doomer space, they would say that the Fed is losing control, that all their efforts with interest rates are going to make inflation return back to the pace we were on for Weimar Republic, Zimbabwe hyperinflation. And what really strikes me about that kind of talk is this meme right here. Let me find it. I may have shown this before, but when people talk to me about how they think a housing crash is coming, or that they're worried about a housing crash, I don't think many people are worried about it so much as they are hopeful that they're going to have a housing crash. Or some people are hopeful that we're going to have some kind of economic collapse, as if it's going to reset the balances and be great for everyone. More importantly, that the people that are able to see it coming, they're going to be the secret kings in this new era because they did see it coming. Because then they're going to know, they're going to have the wherewithal to know to buy all the things that will be valuable, like real estate or cryptocurrency, et cetera, et cetera, et cetera, or gold, whatever your choice of FUD defeating is. But the whole idea of hoping for some kind of economic collapse to get asset prices cheaper for one's self, I think that's an entire fantasy. And the reason I think that is because whenever these things crash, it always comes from the place that people aren't looking. People don't know to look at the vector that this crash is coming from. People assumed back in 2008 or prior that housing was just the best thing ever. It could never go down. It's housing after all. Houses always go up in value. Maybe they fluctuate, but they're never going to crash, right? And so nobody expected it. And for the years that followed, everyone was expecting a housing crash. No one expected that a global pandemic was going to affect the economy. In fact, that hadn't happened since the Spanish flu back in 1918, and none of us were trading or investing back then, I know. So no one really knows where that vector is going to come from. But I do know something about the vectors that people are looking at, which is inflation and interest rates. People are well aware of inflation. People are well aware of interest rate changes. And so everyone from banks to large corporations to, smart individuals have hedged against that. In our Discord, we've talked, over the last several months about buying bonds. I think it was I bonds, which were inflation tied bonds. A couple of months ago, you could get something like 11%, was it? Because it was always 3% over inflation. So back in the era where we had 8% CPI, you were able to get 11% bonds, I think, locked in for about a year. And, it's funny because when you tell someone there about that at the time, the narrative typically is, well, inflation is just going to keep on going up, so that 11% is not going to matter. I was like, okay, well, what are you going to buy? Where are you going to put your cash? No answer, or Bitcoin. And well, since October, that really hasn't been the best. Actually, no, I take that back. That has been the best since October. Yeah, so we are up on Bitcoin since October, since that CPI print, about 38%. Meanwhile, equities, as a comparison, are up about 25%. Hey, look, Bitcoin wins. Yay. So, what I really want to impress upon people when they're consuming all of this fear and uncertainty and doubt. Now, I could very easily have a whole social media career telling people about how bad inflation is, how the market's going to crash, how real estate's going to crash, and how everyone should be afraid and be just running around in their streets, or if you do this, if you buy my product, or if you buy the gold that I take a commission on, that or if you buy the cryptocurrency that I'm invested in, so that the value lifts up for me. If you did these things, you would be saved from fear. I could sell you fear and then offer you a solution that benefits me, which is what most social media personalities do. But I am an individual trader and investor, and I have a really hard time being an asshole to people. I really feel like I should be maybe more of one, especially when dealing with contractors, but I just want to speak the truth. And I think my message is that people shouldn't be so damn afraid of the economy all the damn time. I was going back on Zero Hedge because that's one of my favorite economic readings, but it's always, always, always has some kind of FUD going on. I did a little search, and I don't pay for Zero Hedge's premium service, but I wanted to find some archives because every day I read Zero Hedge, it's some kind of fear, uncertainty, and doubt. And so I just pulled this really quickly. Chart of the day. This hasn't happened since 2008. I don't know if you were trading before 2020, but every single day, this was in December 31st, 2017, every single day on Zero Hedge, or CNBC for that matter, there is some chart, there is some expert, some economic expert talking about how this is the next last thing people were worried about. So now with COVID, this is the next strain that they're going to bring masks mandates back, and vaccines. They're going to round people up in camps if they don't get the vaccine. The fears of yesterday are very close in our mind, and people love to read about it. They love to consume this doom corn, and I don't think it makes people any money. I've known people that have been in cash since 2011. I know people that have been afraid to put any money into equities as we've had this rise all through 2022 up to what we are basically doing is trying to test and maybe break the all-time high for the year before the end of the year. It's entirely possible. We're only in September. It's so close within striking distance. When price tends to get to a level such as this, a low or a high, especially a major high, it's almost like gravity. It starts pulling price towards it. Now, what happens there gets a little dicey, gets a little interesting, can create some, tomfoolery, but also create opportunity. But even though we had this CPI print, which by the way was worse than expected, and yet on that Wednesday was there. It was actually a bullish day, slightly up day, and the day after was up. Had a pullback today, but the key thing is this. We've had a bad jobs report last week. We had a bad CPI this week, and yet what does the market do? It just keeps on creeping up. That is what a bull market does. That's what a bull. And the market is forward-looking. The market may be wrong, but the market is telling us, despite what other people may be saying, that a recession is not something the market's worried about. Why, with all of this fear, can the market be so optimistic? Well, that's because the market's kind of indifferent, and the market isn't reading Twitter every day. Well, technically, I guess it is. But I really think that price is truth. And that's why I spend so much time on it. Somebody asked me today when I was in a discussion about, all this stuff I'm talking about. What's going to let you know, me, Wes Norrock, what's going to let you know where the opportunity lies? And I said, I'm going to look at price. because to me, price is truth. Like I can't read someone's opinion and have it give me a gainful opportunity. But I can look for things like Amazon this year to pull it back to a multi-decade 50% retracement level. Think in my head, I can be very dumb. I can be very dumb and think, well, you know what? Uh, Despite a recession happening, my girlfriend's not going to stop buying stuff off Amazon. And they are not being challenged by any other online retailer, and they do it pretty damn well. If I want to own something for a couple of decades, I want to own Amazon when it pulls back to its 50% retracement from the 2001 low, where everyone wrote off tech stocks, all the way up to the 2021 most bullish year in history high, and about 94.46. And this opportunity, like a lot of opportunities this year, was in March when everyone was fearful. Just go back in your minds, or go back and read some articles from March. Think about how afraid everyone was, whether it was crypto or equities, how everyone was afraid that these three banks that went out of business because the FDIC shut them down, because their loan deposit ratios fell under, because they did not have enough liquidity, because they had invested in low yield bearing securities back when it was a bad time to do, because their risk manager was off on a diversity, equity, inclusion tour for 9 months, because clearly straight white males were the biggest risk of that company, or so they thought. These are the reasons that everyone got all bent out of shape, and I think missed a lot of good opportunities for investment in the year of 2023. And now, as we get within striking distance of the all-time high, your reward to risk is very much impaired, because, like I said, things are going to get a little dicey as we start getting up to this all-time high of the stock market. And how many people would have thought back in October or March that this was even possible? I mean, go back and just look at this chart and like how it makes you feel here. I mean, it's dicey. It's oh man, like we have this bearishness. Like we had this whole year, 2022, of no more YOLO gains, of crypto falling, of rising interest rates, and options just expiring worthless. I don't blame you. I don't blame. I did not have a great 2022 either, but you need to assume statistically that in any given year, stocks will go up. A major economic calamity happens on average once a decade. We had one in COVID. It was overdue since 2008, 2011, if you really, if you kind of want to look at that one too. So you need to assume things will probably be okay. I want to write that down. Things will probably okay. This is what I think every trader should start their day with to themselves. Before they open Zero Hedge, before they open the news, before they open Twitter, I think people need to say to themselves, things will probably be okay. This applies to politics too, believe it or not. I have to remind myself of that all the time. But I think everyone gets to a certain, here, let me give you a little bit of theory, my personal psychological theory here. I think you get, and when you're in your 20s, the world is just new to you. Your brain is plastic. You're taking all in. This is the world you're growing up in. You're highly adaptable. Everything is normal to you. Everything's fine. Doesn't matter what it is. You like to be a little edgy. You like to be on the curb. In your 30s, you kind of sort of like have a little bit of the both, but you're settling into what you think is normal, what you think is okay. But once you hit your 40s, and this is what's happened to a lot of my Gen X friends as they've gone through it, a lot of them end up going off into the woods and trying to learn how to teach themselves farming, because they are just so shocked and appalled at how things have changed from when they were younger. And I believe that their brain is ossified a little bit. And that's when I think the fear starts to settle in. And it's not really conducive to finding opportunities in speculation. So I actually went through a phase of this last week, and I was talking to someone I trust, and they told me something that's really kind of stuck with me, and that's what the whole gist of this conversation I'm having with you centers around. They said to me, I don't think there's ever been a point in history, at any point in years past, where there wasn't a lingering sense of doom. And I think that's true. And if we look objectively at history, look at the 60s, the war was going on, Americans were dying, at least here in the United States, political strife, civil strife, World War II before that, where there was an actual freaking horrible war going on, another war before that, World War One, the 1800s. People didn't even have running water back then. But we all kind of made it. And I think it's important to remember that. But more specifically, when it comes to all the FUD, and someone even sent me a message on Trading View this week saying, like, all the editors' picks now. Actually, let me take a look at that. It said to me that all the editors' picks now are some variant of fear, uncertainty, and doubt. Let's see here. Editors' picks, trade ideas. The cash bubble. Are chips losing their edge? Oh, here's the one that they shared to me. A soft landing. See, this is one of those charts where you do a chart and it shows something really, really unique and bad, and you compare it to bad times in the past, and you're like, wow, this is badder than all the other bads. And this kind of thing is gonna get a lot of engagement on social media because people are like, oh no, I need to be afraid. Okay, that's cool. All right, be afraid. What are you going to do? What are you going to do to make money? What are you going to protect yourself? Those are the kind of answers that should come from this fear, but that's not really what's required because people want to consume this fear. It's more of a consumer good, FUD, where people want to read about this kind of stuff and see this kind of stuff and feel fearful, and then reinforce this anxiety they have, without actually looking at opportunity. And a couple of weeks ago, and this goes back, I'm going to tile this back, and we're going to start looking at charts here in just a second. But this goes back to a friend of mine who he's convinced that the stock market is a bubble and it's going to crash, and so he's bought a bunch of puts. And I was like, okay, dude, I listened to his thesis. I'm not going to poo-poo it. I'm not going to reject it because maybe I can learn something from it. Maybe he's looked at something that I haven't. In fact, I shared that anatomy of a bubble chart and compared that to how it looks like the stock market could be a bubble, and this could have been the bull trap, which it very well still could be, as long as it doesn't come up and solidly close against an all-time high. At that point, we're on to another leg, and it's just going to be we can talk about how crazy it is when that happens. But I'm looking at price to let me know when that happens. I'm not just going to jump right in and think based upon my fear that I want to be short and then find a way to justify it. What I told him is this: if you really are bearish on the market, look for individual opportunities. And of course, one of those opportunities really presented itself in Netflix. It's at a level, it's an individual stock, it's going to have high beta. That means it's going to be potentially uncorrelated with the rest of the stock market. That is what I want to do in a bearish case. I want to look for bearish opportunities in individual stocks to play my overall bearishness there. Even if first of all, the dollar failing is just such a outlier calamity that I'm hesitant to say it's not going to happen, but let's just put it this way. Your mom, your grandmother, hopefully if she's still alive, your third grade teacher, they kind of need the dollar to keep on going, because while you yourself may be kind of tied into some alternative finance, they're going to be kind of SOL. And the United States government, the Federal Reserve, and all those people that have high degrees and going to work every day, they're working for those people. The average person that just wants to go to work and get paid and buy stuff. They want to keep that going. It's not for their power. They want to, they may you have a couple of narcissists may want to control things, but ultimately I think they wake up every morning and go to work thinking, you know what, I want everyone to be employed and everyone to buy the stuff that makes them happy. And so people are going to fight for and try really hard to keep this system going. And so I think the markets are still going to be open. They've been open in every single recession that we've had over the last about 100 years. They may be closed for a few days during World War II, but by and large, markets have been open. And so if things do start to go crazy, you're going to be able to log into your platform and find opportunity. And that's my mindset. I want to be able to find opportunity. So if you do have a bearish bias, don't just come and send these things to me. I'll read them. I'll talk about them with you. But don't just say like, well, I did a search on Google and Google Trends shows me that this is now up. Okay, and what are you going to buy? Well, it's just bad. Okay, well, what do we do to make it less bad for us? Can't change the world. What can we do for our own? Well, I'll sit down and try to help people come to that explanation. I'll try, and I'll share it with you guys. But I digress. Thanks for listening to my rant. Let's take a look at some of the comments in the chat. Again, if you have a symbol to look at, now that people have kind of filtered in, I want you guys to post it in the chat for me so that we can take a look at it. I'm going to give you my opinion. You may not like it because it may be not telling you that things are going to go up and be super bullish, but it is about sharing ideas with each other. And that's what I've always wanted to do in forming community. Link below for my Discord. It's not to charge people for classes or anything like that. It's to foster a place where people can share ideas. And that's what I try to do with these Friday live streams is share my thoughts. Hopefully they can be useful, but also get back from you guys, things that you may be looking at. Because again, this Netflix is one that a live stream viewer brought to my attention. There's been many, many others actually. MetLife is one that came from the Discord. This was another friend of mine on there that pointed out this back in May came to a major 50% retracement. Insurance, that's a company that's going to be able to. Insurance companies are really going to be able to take advantage of rising inflation because what they're going to do is they're just going to increase their premiums. They may have. I don't really know exactly what drives it. I do know from talking to actuaries that insurance is a very cyclical market, just like any other market. But I'm still pretty convinced that despite all the FUD and despite the fact that it hasn't gone up very much, banks this year are actually still a good investment because what they're going to be able to do with higher interest rates. And I've talked to some local bank boards. I'm actually own some shares of some small banks, local banks, and they've told us that deposits are down, which basically means people are running out of money. Where's the local bank? What's the local bank symbol again? Oh yeah, LLY. That's just there's always opportunity, guys. I mean, Eli Lilly Pharmaceuticals. I mean, moving like a damn cryptocurrency. CELH, which is Celsius. Those energy drinks. I mean, who would have thought that sugar water was so damn profitable? And so just the idea, and this is like going back to 2021, 2022, Monster energy drink. I mean, sugar water. That's coming down a little bit. Actually, I think we talked about this last week where maybe about 49 is a good level to start looking at this for a pullback. KRE is the local bank. Yeah, so I got a shareholder letter from local bank that I have shares in, and they are seeing what I expected, which is they're able to turn more of a profit on the margins between what they borrow at versus what they loan at, which is how banks operate. But to kind of offset that so they're just not going gangbusters in profits is because deposits are actually down and people are actually taking out less loans because the interest rates are higher. And so that's kind of evening itself out. But the fundamental way that banks make their money, higher interest rates benefits them because they're tied into that spigot of money printer, and then they sell it to other people. All right, let's look at some. Oh, and another thing somebody asked me, like, what would you be investing in if someone didn't have money right now, if someone just they were out of a job and they didn't have money, what I would tell them to do is, yeah, we can talk about trading and that kind of stuff, but first you need money. But if you need to get money, trades. maybe you need to go to school. Well, you probably want to go to school to get electrical. Plumbing, you might want to go to school too to get like a license if it's required. But for home improvement projects, I've been doing stuff for myself on my rentals, and the price that I've been quoted versus the hours that I put in myself to get these things done is somewhere from anywhere from 150 to $200 an hour. Put an ad on Craigslist that you're willing to do at-home projects that other people don't want to do, and then use YouTube to find the skills to do it. So the get rich method for right now, because what happened in 2008 was all the home builders, contractors, they got very beaten. I mean, there were a bunch of them because house prices were so high. They went into the business and they either retired or stopped doing the work. And now, 15 years later, a generation later, we have a shortage. This is in the United States, and I think everywhere else too, actually, but mostly in the United States. And so if you can do these skills, you can make a lot of money. And I think we're going to see over the next couple of years, the prices on labor will come down because people are going to feel that economic arbitrage. I really think that, but it's going to take a while. But I think that's going to happen over time because that's what happens. Economics incentivize people to change their behavior, and people will start going into these kind of trades. All right. Let's look at some of the questions. Got Casey's to look at, and let me go from top down. All right. Hi, they are in Belgium. We'll take a look at the Bitcoin dominance. All right. FTX upcoming liquidations. Looks like approval has been granted for FTX to approve $3.5 billion in crypto. Can you send me a link? Because that's a little cryptic. BTC dominance to 60%. Well, BTC dominance is one of these curious little metrics that I'm not sure how to make money on. People bring this to my attention pretty regularly. There it was to 52%. I mean, sure, it can go to 60%, but what does this mean? Well, Bitcoin can be super dominant, and it is because it's always sort of had this safe haven kind of currency vibe when you're in a bear market, that people go to Bitcoin because it's the first mover advantage. It's considered to be it is actually one of the lesser volatile of the major cryptocurrencies. It's less volatile, has less volatility than Ethereum, less volatility than some of the others. Definitely has a lot less volatility than the shitcoins. But I don't know how we make a trade off of Bitcoin dominance. I think it's a cool kind of economic factor. It's kind of like the inflation, the CPI, where people that are so interested are going to look at it and talk about it and what it means. But it doesn't really tell me to buy or sell Bitcoin. And so that's my criticism of Bitcoin dominance. It's not like Bitcoin when it hit the 50% of the high in March of 22 to the low of November 22, creating a 50% level that had me short it back in July. Nor is it at the 50% of the March low to that said high that has created a very clear 50% floor here as we currently stand. And so I find the actual price of instruments to be far more useful, both in putting in your orders, but also in gauging sentiment when it comes to making trading and investing decisions. So I'm just not really sure how we use Bitcoin dominance to find opportunity. I'm just not. So, all right. Well, that was, hope I'm pronouncing that right, HNC. I think that was basically my real estate update. I think that what you're going to see, what was that, what was the, I have it in my notes. Use my words. Oh, NAIL. It was the Home Builders Index. So, excuse me while I cough. I've been watching the Home Builders, Direction Daily Home Builders and Supply. Oh, this is a 3x leverage product. what's the home builder product that's not leveraged? I don't like leveraged products. I think that the scale in terms of the breadth, the time for real estate, home builders, renovation supplies, etc., to normalize is going to take years. It's just such a high lag time, lead time environment. It takes a while to build a house. It takes a while for these factors to play out. What do I think about real estate? I'm not buying anything right now because the numbers don't make sense. And I think that a lot of people are, they have sort of like golden handcuffs, as it were. Golden handcuffs are where you get locked into a company because the benefits package is so good. I think that some people are sitting at 2.5%, 3% mortgage rates, and they look at the opportunity cost as well as the actual cost of moving into another house. It's either unaffordable or they feel rightly that it would not be prudent to double their mortgage payment to move somewhere for basically the same value house. You can have a house that's a good value here. Maybe you have enough equity to get a down payment, but now your mortgage rate is going to be twice what it was. And so I think that is factoring into people's decision not to sell. I think it's probably even easier in some. In fact, I know I read an article about a week or two ago where a person made the very justified case, especially in markets like California or other blue states, where home prices are about $1 million. You can rent a home for $3,000 a month in these places. You can get a $3,000 a month rent on $1 million house. But to buy $1 million house at a 6-7% interest rate now, that's going to be about $6,000 a month mortgage payment. So the whole adage that you need to just buy a house to build equity is completely out of whack right now. You're better off to spend $3,000 on rent, put $3,000 that you would pay in excess of that to a mortgage into a savings account earning 5% interest than to put it all into a mortgage, because most of that money of a mortgage payment is going to interest anyway in the first 10 years. The way you actually build equity right now is with a savings account. The math is just as such, with the savings rate being at about 5%, mortgage rates being what they are, and house prices being what they are. Those are the economic incentives right now in the housing market. And you can't do renovations because it'll cost you about half the cost of a house just to maybe change a bathroom and a kitchen together. It'll cost you about $200,000 to do like a full renovation of a house. So, I mean, the numbers don't make sense for people to sell their house. It's probably better for a lot of people just to sit on it vacant or at a low rent, which is one reason that rent prices have been coming down, than it is to sell and lose that huge chunk of mortgage at sub 4% interest or sub 3% interest. Those are the things that are playing right now, in addition to low inventory because all the home builders went out of business 15 years ago. That's going to take years to play out. So real estate is just going to be sort of a waiting game right now. That's my answer to that. So, yeah. All right. If BTC goes up, if BTC dominance goes up, it can be smart to wait buying alts. Well, I would ask you this. Let me just kind of be a little bit of an asshole here. Why do you want to buy altcoins? I mean, I know to make money, make sick gains, bro. But what are the use cases that these altcoins are being used for in business or by people to better their lives and or become more efficient at their business or generate more goods and services? Like what? I mean, these are all great ideas. These are all speculative ideas. But we've kind of seen, we've had a decade of cryptocurrency here. We've had a lot of years for these ideas to kind of flush out. Like, what are people using? What cryptocurrency use cases are being used to build wealth? Amazon, that's a company that makes it where you don't have to go to the store. You can save on gas. You can save on your time to get stuff delivered to you. That builds value for people. The post office, people used to have to spend money on stamps, and the internet came around. You can email people and save the cost of a stamp, save people money. What use case is cryptocurrency building wealth? And if you can't answer that, if you don't have a good answer for what wealth this cryptocurrency is going to build or is building, then really the only way that the valuation of these cryptos goes up is by cash inflows, people buying them. And where do people get that money? Well, they used to get it from the money printer or savings, but everyone's savings rates is down. The money printer has been turned off, and you can get 5% putting your money in a savings account, and it's risk-free, 5%. And then if we assume that CPI is correct at 3.7%, if we assume that inflation is 3.7%, in other words, our buying power is going to lose by 3.7% year over year, but we have 5% on a savings account, which pretty much you can pull out any time. These aren't even CDs. You can get a savings account as like an introductory rate at some banks. If you move your money to them, you get a 5%. Not sure what the terms are, but you can earn a whole percent ahead of inflation doing nothing. And that's what's driving a lot of the lack of investment in risky speculative assets. Because why? When you're looking at 0% to make, you're not making any money in a savings account. Well, you got to do something with it. So let's roll the dice. I think a lot of people that are very heavily invested in crypto have failed to acknowledge that crypto was invented and matured in a 0% interest rate environment. I'm not saying it's dead, but something has changed. And I think you need to look at putting your money into investments that have a proven track record of generating wealth. Companies, equities, stocks represent ownership in a productive enterprise that is selling stuff, generating profits, which it then returns to shareholders either in share value or in dividends. That's how capitalism works. Now, you can have speculation, which is what crypto was, but you don't have that free money sloshing around to pump those asset prices up. So you need to have a cryptocurrency that's generating revenue. Find me that. And if you can't find that, then you're just reading some forums or some Twitters about rosy pictures about what can happen without any actual substance. So be careful. Be careful. So even if Bitcoin dominance does go up or down, you need to ask these fundamental questions about investment when it comes to putting your money into these things. These things were a pretty damn good lotto ticket back in 2021. But we need to be honest with ourselves about what is going on right now in the market. We really do. We really, really do. It really behooves you to do that. Hashtag this is not financial advice, but it is. All right, let's look at Casey stuff. KKR. Casey, if you guys are just joining and don't see his consistent production of ideas, he likes to do breakouts, which is good because I am not particularly a breakout person. I like pullbacks. KKR, this looks a lot like it's very, I would say low beta, because here you have, I'm always looking for, an all-time high there at the end of 2021 and a turn around October of 2022, just like the S&P basically did. KKR, though, I don't know what they do, but I can look at the price action and aha, okay. Was this one from last week maybe? Because what you have here is you have it coming to this key 50% retracement level from 84, the high, down. Oh, let me redraw this. Wait, it's from the low. I'd always do, by the way, when I'm doing my 50% retracement levels, it's from the tippy top to the bitty bottom of the major trend. So that's pretty easy to see. All right, so this is a thumbs up from me, because not only do you have a good solid few days of breakout here, but it's also, you came up to this level. Let's just back it up and see what happens. So typically what you want to see when price gets to a key level is you want to see respect, RESPECT. And what that means is you want to see price come up to it, bounce off of it a couple times. All right, that tells you, okay, That level that I have off, that I trust, that I look for in every single trend, that 50% level has been hit. It has been attempted to breach, false breakout, but then with subsequent price action, finally, it had its chance to go down. It did not. And instead, boom, it's punching up. In fact, you got this little nice little finding of support on a little mini me 50% level right there. That red Tinkinson line from Ichimoku. I like this. I like this a lot. I like KKR a lot. I'm going to watch this. Sometimes you got to be careful that price doesn't get to that 50% retracement level and then hold it. And so I want to see stuff like this. I want to see days, candlesticks closing above that level, especially above this previous high that it made in early August. And then, yeah, that's good. I like that, Casey. I like that. All right, rig. Transocean, man, they had trouble back in the day, didn't they? Back in that, what was that oil spill? That was many years ago. It was BP that really got hit with that. Sorry, I'm let myself get distracted. Was it 2010? I don't remember. All right, but let's see. Back to point. Rig. You know, this, contrary to what people believed back in 2020 and 2021, oil is not free, and we still need it to run the world. And so, specifically, we'll look at this, and then we'll kind of, look at that. Beautiful. I like it. I like it a lot. It makes me smile, because this is another good example of where you have, just like I said in the previous one, KKR, you have price come up to that 50% retracement level, hold it as a resistance, come down, mess around a little bit, come back up, break it, stay above it, and it even come back to retest. This is an excellent, excellent example, thank you very much, of price breaking a major level and then coming back to retest it comes up to resistance, breaks above it, comes back down, holds it as support, confirm it. Support turned into resistance. Really, really good. Yeah, I like this. I like this a lot. Rig is good. Thank you. That's why I do this, guys. Thank you very much. Is so that we can share ideas for good examples, because I'm not looking at every single stock out there every week. But yeah, this is a good one. I like this. This is bullish. Good opportunity. All right, let's see here. Thank you, Richard Milk. FWRG. Oh. FWRG. First Watch Restaurant Global. All right, let's see here. Yeah, I'll look at yours next gen. All right. Not much price history on this one, but let's go up and down here. Okay, another good one. Hey, are you paying attention to my live streams? Are you paying attention to my live streams and the lessons that I teach? Are you going to make me feel good about myself? Thank you so much. Yeah, another good example holding right here. Yeah, bullish. I like it. You know, out of these, look, here's the thing. Look, we're not going to win every single trade. We're just not. But if we go back and if we were to take both of these with a 3-to-1 reward risk ratio, at least one of them, or a high enough percentage of these, are going to work. Maybe not even half. But if we play the numbers on these kind of setups, this kind of price action, we're going to make money. And that's the name of the game. Like, I didn't know. Yeah, the Netflix is doing pretty well. You know, I didn't know Netflix was going to work out, but it's just a consistent trade that I look at, hitting a 50% retracement level, especially when we have that spike out. By the way, spike indicator is free. Just send me a message on Discord with your TradingView username or a message on TradingView. Don't charge for it. It's because I don't think it's that simple. That's difficult, but it really helps to identify these false breakouts. But that's exactly what Netflix did at that level. Put those two together, that's good money. Glad you got some use on the Netflix short. Good. Were you the one that brought up Netflix about 2 or 3 weeks ago when I said, hey, I need to take a position on this on Monday, Richard? Was that you? It may have been. Thank you. And Other people think you too, or they should, that I shared that on Discord and on TradingView. All right, Litecoin. Haven't looked at this in a while. I'm sorry, dude, but I mean, it kind of fits within my whole spiel about cryptocurrency as a whole. And it's going to have even less of its own kind of benefit. At least with Bitcoin, you have the maxis. You have a very committed group of developers and religious zealots that are out there trying to pump hype when it comes to that. But I just don't even know where Litecoin fits into this anymore. For me, it's really between the three that I have up right here, which is Bitcoin, Ethereum, and Monero. Maybe you could sell me on another cryptocurrency, but Bitcoin because of its first mover advantage and its scarcity and its hype surrounding it, Ethereum for its smart contract use cases, and Monero for its privacy. Litecoin was invented to be an improvement upon Bitcoin. It was supposed to be faster and cheaper in transaction cost, but I think in a lot of ways people just don't care about that. I think people in Bitcoin space have settled on imagining Bitcoin to be a global payment underlayer of settlement. I think there was the highest paid, hold on, highest Bitcoin transaction fee. There was a highest Bitcoin transactions fee 2 days ago. Now, this may have been it has to have been a mistake, but it happened where PayPal partner Paxos overpaid $510,000 worth of Bitcoin in a transaction fee on September 10th. It initially was thought to be a fat finger mistake. It has now been traced back to an issue with PayPal's processing system. So probably a technical thing, but the fact that Bitcoin is not really scaling very well is a major issue for Bitcoin. And years ago, like a decade ago, Litecoin came out. I don't remember exactly when it did come out, but a few years after Bitcoin came out, it was supposed to improve upon this failure of Bitcoin. But it really hasn't been adopted as such, nor do the people that use Bitcoin seem to really care about fixing this major problem with Bitcoin. People just kind of accept Bitcoin for what it is because it has its first mover advantage, and it'd be so costly for the miners and the exchanges to the people that vote on the changes to actually implement any kind of change. So it kind of continues to exist. So I just don't see the use case for Litecoin other than if and when cryptocurrency pops off again, it may get some kind of benefit. But again, I asked that same question: what unique use case does Litecoin fit? And when when Bitcoin and Litecoin for that matter came out, we didn't have Venmo, we didn't have Zelle, we didn't have Cash App, we didn't have ways to transfer from your phone currency, like wealth, value to people. There was a moment in time there where everyone thought that Bitcoin was going to be that solution. But through lethargy and seeking approval rather than forgiveness when it comes to regulation, the mainstream traditional finance has come in and eaten that use case. So like I said, I appreciate you sharing. And, when I say share me your symbols to look at, you may not like my opinion, but I just don't see anything here. I mean, it's not quite in free fall, but, a lot like Ethereum this week. We had a little dip earlier in the week, which broke below the lows. I think Ethereum also had the same thing. And it's still holding here. It's at a support, but I just don't know what's going to lift it off of this. It just seems like it's just punching and punching and punching, trying to break that support. All right, more Casey. Oh, let me do Jen first, I promised. All right, Jen, he even pinged me. Or did you ping me for something I said earlier? XHB. Home builders ETF. There we go. Okay, thank you. Yeah, so the fact that home builders are going to be more and more profitable at higher rates of homes and at higher rates of, renovation. I mean, that's not a secret to the market. I would look at this like I would anything else, but it looks basically like the stock market. Perhaps even better in terms of holding the 50% retracement back in June and in October of last year, 2022. But again, like the stock market, it's coming up to its all-time high, so the reward to risk is going to be much impaired. So, unfortunately, no edge there. I believe there will be a time when an employee owns the company they work in. There won't be a couple of people owning it all. There are many examples. There was a company which was going bust in points. Well, I mean, you can buy stock in a company. ESOP could be a start. There will be more CEOs, not one or two. You know, there's a saying, maybe it's here in the South, maybe it's everywhere else, but too many chiefs and not enough Indians. I don't know if having a bunch of CEOs is a great idea. All right, let's see here. RPRX. Casey Trade, Casey Breakout. Pharmaceutical company. Betting on it go to zero, eh? Well, no, but you're betting on 2-1 down. Okay. Hey, what happened to Disney? This was one of those. That reminds me. Disney did it hit its low? Hold on, I got a draw in here. Let me check. Let me clean this up a little bit. No, Disney is one of these that I think people have been wanting to short. And it's funny because I mentioned this last week that my spidey senses were tingling as it approaches this low, and more than one of my friends were like, "I want to short Disney." I really was like, "Oh, like what do you?" The reward to this is the problem with trying to go short at a major level. Just like I was talking about with the how hard it is to try to go long on the stock market right now, how difficult it is because you're getting so close to that key level. And just like with the home builders, I'm glad you did buy Disney. I think I probably would have waited till it hit the low proper, but I hope that I'm wrong for your benefit. Wait, that's XHB. So like this right here, I mean, if you buy it here, trying to get it up to here, now you're dealing with this gobbledygook. And so the same thing happened with Disney. So I really want to see, you know, in the case of the breakout that Casey was doing on the short side for RPRX, he's got just nothing below it. But with Disney, you really had to wait until. But now Disney has actually come up to this little local 50%. Pinged it today. It's possible it may come back down to 82.97. Let's call it 83. We'll see. Hopefully next week, Jen, you need to see it break here and conquer that. Because that is also this key support that it kind of got to right here. So be careful. Be careful. In fact, we'll talk offline about it because I can give you #financial advice. All right. Let's see what else. CB. Chubb. Are we trying to get it to break here? Yeah, see, this would be okay because you could still play this up to the high, the all-time high there. So you got a good bit of good chunk of, let me look here. So 228, target of 228. Yeah. So I think that this would be one that I would like because you're basically playing it, breaking again. This is like an earlier trade you were talking about, breaking the 50% and continuing up. I like that one. TNet. Just break of the all-time high going up. Good stuff. All right. Hey, Norrock. Update on GDX and UCO. I believe these are oil. Oh, gold. Okay. GDX is gold. As I've said, I am still short gold using GLD, but I still, from the May false breakout, again, spike, send me a message if you want the indicator. Spike there back in March, or no, May. Slowly, it is grinding down. I'm looking for gold to come down to 1850. In the broader context, I mean, it was either going to break or it wasn't, and it looks like it wasn't. So I'm bearish on gold. And for that matter, I have to be biased against gold miners. and I think I even have it marked off here. I think maybe you even like it. It really should have come down to 28.89 or 29 as we want to call it, and it should have held there. But you got this break. It's probably in the price action game here, but it's just not exhibiting anything to make me want to think it's bullish. And again, I'm bearish on gold, so not bullish on gold miners GDX. UCO, which is oil, I do believe, I am bullish on oil. Yes, so this was. I'm not sure what's going on with this particular product that's causing this. It was USO was what I traded years ago back in the 2020-21 run. I'm not sure what's up, how they do their product here, but when I look at oil, I look at just CL, the futures. And if you take the 50% from zero, which I know you have this little outlier event, which was a whole history behind it, but from zero to the high that it made in February 2022, that 50% retracement was a good, solid support that it hit earlier this year in March and in May, and it is rising off of this. I am presuming that oil is bullish, trying to retest the high, and look, we still have cars, so we still need oil. We did not all go electrical in 2021 like a lot of people thought. So for price action, for doing an analysis in oil, I'm going to use oil futures, and that's bullish. So by that extension, UCO should be bullish as well. So yeah, UCO. These are just my preferences, and I could make the case for you for why you should use futures to do products stuff. Unfortunately, no one has come in a long time and said to me, "What do you think about the price chart of this?" Which ended up being like a triple leverage product, which immediately you have to not use because it's going to be 3 times influenced by its leveraging. So you really shouldn't be doing any charting on leverage products or derivative products like UCO or USO. Yeah, that's what I would say. You really shouldn't do your analysis on derivative products. You should do your analysis on the price of the underlying asset or commodity itself. Let's just make that a first principle for, when we're looking at the price action of things, because USO is going to be different from UCO. They're both going to be influenced by the same factors. So let's just actually look at the factors they're being influenced by. So if that were the case, if we're going to do a perspective on that, where's our first resistance on this? Well, 9707 is probably where we would look for. So for the next couple of weeks, this being a weekly chart, I mean, we're going to have some chop, but that's what we assume it's going to go to is 97, and whatever tail, this is the dog, and UCO and USO are the tail, so the dog's going to bring the tail along up to 9707. AMD, not AMC. Okay, you know what? Freudian slip, we'll look at AMC rather. Okay, this one is one I believe you probably may have been in here before, but I've already got it marked up, which kind of reminds me what my point was, that you had a major 50% level that should have held. In other words, what it should have done, we were using these past examples before. I think that, who was it brought these up to me? I think it was Richard Milk brought these up to me, where it has broken the 50% level from the all-time high of November 21 down to October 2022. It really should have come up and then broken out from this high right here, but it could not. And now it has come back down and it has turned that level. In other words, you see how it's already confirmed it there 2 more times as resistance, and now you're kind of caught in this little range right here. Let me just clean this up. So the key level that it's fighting is the 50% retracement from the high to the low. That's 109.51, and where it breaks from this zone it's formed underneath it is going to be critical, but it's already on the lower side of it. So if I were to be in a long trade, I would have my stop somewhere below that low right there. And you can believe in the company, you can think it's the best thing since sliced bread, but if you're managing risk, you really need to cut your losses. Hashtag not financial advice. Do what you want, but I would cut my losses once it broke there, because you just don't want this thing. You just don't want to come back to me on the live stream here and say, "Hey, Norok, like I held on to it, and now it's down at 60. It's coming close to this low. Do I sell it here? What do I do?" Because at that point, you're already down a bunch of percents. I must remind people of the warning lessons of Zillow. What happens when it gives up its 50%? Also, PayPal. These are tech-based products. Tech is volatile. PayPal is just one of these kind of why you don't bag hold sort of things where it comes down to that 50%, loses it, and you really got to cut your losses when it breaks out of that price action down there, because now you're in for a world of hurt, and you're not going to have a good answer. I'm not going to have a good answer for you. You're best to, I mean, if you just want to own AMD because you think their chips are the freaking bomb, then that's your right. But from a price action perspective, do not let it break the August low. While we're looking at that, Intel may be a better choice. You got a lot of good movement up here for Intel to get to 46.54. I don't really see an opportunity here yet. I would say probably the opportunity would have been, hindsight being 2020, like most things this year, back in March or May of this year, back when it did this pullback here. That little, was that a spike? I wonder if that was a spike down there. Not quite. Yeah, it was. It was actually a spike. Maybe not one I would have necessarily taken because of the risk reward. But yeah, a little false breakout right there. Indicator catches it right there, that 29.29. But again, the key thing here is there's just a lot more upside potential to be long Intel than I think there is AMD. I think AMD is, I hate to say it this way because it's kind of committing a cardinal sin, but I think that at this point, the bottom may have come in for Intel. That's possible because, man, they've had a bad couple of years, that's for sure. But it looks like it finally found some kind of stability, and it's on a rise up, and now it's going to try to, again, these levels become kind of like gravity, because now that the trend has started up, the test is not going to be until, about that 50% level. So there's some good movement in there. There's some good motion in there. I'm going to make a note of that. See, sometimes when you look at one thing, like AMD, it behooves you to look at perhaps a competitor and see, okay, well, is this company specific or industry specific? While we're looking at that also, let's look at NVIDIA. Now, NVIDIA has been kind of a challenge for me. I've been talking about this every live stream for weeks, not just because people ask me for it, because I'm looking for opportunity. So essentially, the key thing that happened in NVIDIA was the earnings on 2 weeks ago. Let's look at the weekly chart because that's where the real story is. So you had the all-time, is it all-time? Yes, all-time high of NVIDIA. AI has been huge this year, as you guys know. AI is going to take over. Elon says it's going to destroy us, but little do people know, Skynet already came online back in 1997, so we're already done. But NVIDIA, selling the chips to do AI and bring about our destruction as they are, has had a gangbuster year, and earnings came out, and so often when you have a company that's having a great year, great earnings, great revenue, is earnings comes out, even if it's better than expected, it wasn't like they cured cancer or discovered gold in, I don't know, people's fat cells with a pill. They would just poop gold. I mean, something like a product like that. If you don't have some major ultimate thing to really push it to new heights, even if you have good earnings, it's going to be what people expect, good earnings. It's not amazing earnings. But the price, as I say, is truth. And the price that week, the earnings week, did not close above that past high. Danger. And so rather than, I know better than to just immediately go and throw puts on something where I think it's going to go down after it's been going gangbusters. So I've been watching this very closely, and I haven't taken a short position yet. But, the week after earnings, it kind of made a little run for that high. Didn't quite make it, but still closed above that past high. I'm kind of like hindsight being as it is, maybe I should have had a little more testicular fortitude and just thrown some short on it based upon the fact that it couldn't close for a higher high, but that's not really a setup of mine. So I've been watching this very closely over the last few days and weeks, looking for an opportunity. And last week, when we looked at this on the live stream, this local price action right here, let's go back to the weekly. It came to 452.89. It closed the week to hold that 50%. I can't short something at the 50%. I mean, that's the support. I just couldn't do it. And so this week, I'm sitting here, checking the alerts, looking for some kind of opportunity. Did not particularly see any sort of 30-minute setup in here. This price action just didn't speak to me. And I like to have rules. I like to take trades based on setups. And so I'm going to be confident, just like I was confident earlier this year with Tesla, that if I watch it closely enough with a bias, I will be able to find an opportunity I think is acceptable with good short-term and then long-term risk-reward potential. Since I mentioned it, Tesla just go up. I mean, I would have liked the trade of this year in Tesla. For those that were high in testicular fortitude, it was to buy it back in January and then know that you probably should not be adding in February. Even if you did, now you'd be okay. But I waited patiently for the pullback, made several posts on Discord and TradingView about it when it pulled back to 160. Even pinged specific people that constantly bug me when to buy Tesla. Hey, here's your ping on Discord. Did they take it? No. So why did I even do that? But that was the opportunity in Tesla. Like any winner, I wish I bought more. And so I was patiently waiting for maybe it to come back to another 50% retracement level. Could I have been a little more aggressive and bought it at this inflection point, the high, to retrace it? But I didn't. I'm going to be honest with you, I didn't. So I'm sitting at $160 Tesla shares, wishing I had more like everyone else. But I'm still waiting for another opportunity. And that's Tesla. So if you were watching live streams, if you were on Discord, if you were reading Tesla in this era right here, there were a couple of days here where it basically made a head and shoulders pattern. Really interesting price action in Tesla, honestly, in the first quarter of the year. And I sat there, I actually shorted it and didn't make that much off the short because of this garbage right here. But I waited for 2 months, finally got my opportunity. And so same thing goes back to NVIDIA. I know I want to be short. Just every week since earnings has told me that. But where's my trading view? Oh no, trading view guys, can you see? Can you hear me? Or do we completely lock up? Jen, is my internet going out, or am I still on? There we go. Okay, I'm back. Okay, good, cool. All right, so yeah, I'm being patient. I know I want to short NVIDIA, but that's not going to make me just jump into it. So all right. Wow, we're past the time. So let me wrap up everything. All right, GILD, Gilead. I gotta go to a monthly chart to try to find some structure here. This is a long-term looking play here. If I'm looking to find structure, very messy around that 70 level. But in more local time, from the low to here, okay. You got a good reason to own it at 73.45. Broadly on a multi-decadal level, it's just tricky. You really got to measure it back from 2010. I'm not gonna go all the way back here to make that look better, but you really got to measure it from that trend. Oops. This is how I would structure a trade around this one, because what you have going on is you have a false breakout of the low here that came down to test the 50% of the trend from June of 2022 up to December. So I like that level. Also happens to be a gap there. And of course, the start of the gap, the high, right, is there. So let's see what we can do with this. We know that we want to set our target kind of conservatively in the zone around the high. And we've got to pull back here to a 50%. Now, I know this is Friday and it's closed, so we can't really act on it. But if we know that we want to get up to here as a trade, yeah, we can get a good, that's acceptable. Okay. So that's how I would structure a trade such as this. 75.52 with a profit target of 88.75, and your stop is going to be just breaching that gap right here. So basically, you're gonna give yourself maybe a retest of here, but it should hold here. If everything goes well, this 50% retracement level, because basically it's a reaction off of that low, that little red line Tinkinson, which is based on Ichimoku that I have on this my chart here. It's built into my spike indicator, by the way. That right there is the first hold that you should see of a support, is this little local 50% that should be the stepping stone for this to come off of the wider 50%. And so this price action is worth a trade to get back up to retest that high, because you know that you know what your risk reward is going to be, because you can have it that lets you cover that low. You can even let it cover that gap. So GILD, that's one for taking notes on. Thank you. This is why I do this. All right, BOH, Bank of Hawaii. Wonky. My first guess when I take a look at this, I mean, I'm doing this for many years, so sometimes when I look at a chart like that, GLID, I can be like, zoom in on it. This could be, my opinion of this could change based on dividends. Let's see what the dividend yield is, even at this price, because that's where a lot of banks are delivering value, even at the current crazy. This is where I step outside of technical analysis, is with dividend yields. 5.58%, that's good. So I would say with this, you might want to wait for a setup, but more, this is going to be a dividend play. That's a pretty good dividend right there. Again, this fits into the whole banking FUD narrative. I still think that banks are undervalued this year. I still think that there's an opportunity there. I mean, the reason they're so low is because of what happened in March. So it's sort of a be greedy when others are fearful. It was really the case back in March, and I think in local banks that is the case. I think you have to look at banks as an opportunity broadly. And so the individual banks, maybe if you're really smart, you're going to look and see, are their loan to deposit ratios good if you want to get into those balance sheet fundamentals. But broadly speaking, banks right now are a high dividend play, which means they're higher risk because they're paying such a dividend. But a lot of these you need to look and see, what is the history of these banks' dividends? And so in the case of this bank, let's see. So dividends were 70 cents. Before that, they were 70. Before that, they were 70. Before that, they were 70. One of the reasons they're such high dividend plays is because they've been paying the same dividend for years, and they don't want to cut dividends because, well, that's a sign of weakness. And so when the price of these banks drops so low, they're still returning the same dollar amount of dividends to people, so their yield goes up. But you also have to weigh that with a 5% savings account rate. You can get a 5.5% dividend yield from Bank of Hawaii, or you can maybe put your money with them in a CD and get 5%. You won't get the benefit of the appreciation in the stock, but you also won't take the risk. And so that's where that extra 0.5% comes in. Banks are a dividend play, but I don't really see any technical setups in them at the moment that really make me want to buy them more than anything else. Solana. Solana is a cryptocurrency that was invented, I believe, ostensibly to take market share of smart contracts from Ethereum. And I don't know if you were here when I was talking about Litecoin. I don't know if you were here when I gave my spiel about cryptocurrency, but you need to ask yourself, what business use case is Solana meeting? What businesses are using Solana? Not crypto businesses, but like, is Walmart using Solana? Is your local coffee shop using Solana anyway? You really need to have these cryptocurrencies start producing value for individuals or companies. Otherwise, they're entirely dependent on cash inflows. So unless you yourself are willing to start pumping millions of dollars into Solana to pump up the price, maybe get a couple of friends to do the same. If you're not able to do that, then I don't think you're going to be able to get this price up. And no one else is either. And so a lot of people, I think, in the cryptocurrency space, they're bag holding. They really believed in these projects. And that's fine, but we need to take a lesson from that, and we need to look at things objectively. Like, what is it going to take for this price to go up? I can draw a bunch of lines on the chart, and I can tell you something to make you fit your narrative, but that doesn't really matter. What matters is cash inflows are what lifted and what could lift the price of cryptocurrencies, and the money printer got turned down pretty low. And the hype has kind of died off because people got burned, and people are going to remember that. And they're going to remember that for definitely a little bit longer, possibly, but maybe not guaranteed forever. So like I said, unless you're doing yourself something to pump the price by buying it, I mean, you're sitting on waiting on somebody else to pump your bag. And I don't know if that is the best return on capital. So, BX, Richard Milk says. Blackstone. It's not BlackRock. It's Blackstone. What does Blackstone do? Who got such a cool company name as that? Again, wonkiness on the weekly. Didn't really hold that level. Where's our resistance? Breaking it. All right. Well, see if you can get a trade to come back to here, and then make sure that your stop clears that low like that. And so if I was going to look to take a position on that, not really my type of trade because the levels aren't really lining up. But if I were so inclined, wait, what happened when I hit adjust? Adjust for dividends. What? That's kind of a cool but useless for me feature with TradingView. I guess this is if you're calculating. Yeah, this is if I've only noticed that in TradingView right here, right now, where if you click, usually if you click adjust on a futures chart, it will adjust for contract changes. But that's kind of interesting that it adjusts for dividends, because I assume what that does is that lets you do a appreciation, a percentage calculation based upon actual returns, including dividends. In other words, if you bought there, you'd have 240% returns as opposed to just price. It's kind of cool, but for me as a price action trader, not really useful. What I meant to do was adjust my price scale. Cool though. I'm glad I know that, and I'm glad I was able to share that with you guys accidentally. So yeah, I would say that if you're going to structure a trade, it will look something like this once you pull back to that level, and that can get you a little continuance on to there. You know, this is a lot like what basically happened in March with the S&P 500, where again it comes down to just barely almost kiss that 50%, and we had a major 50% that all throughout the beginning of the year price on the S&P 500 came up to, I think this was a CPI print right here, and then you had February, and then you had, of course, March take us down with all that banking FUD, and then look at what it did, and once it broke it, that's the power of the 50% level, right? That's what you want to see in those that you brought up, Richard Milk, and we looked at a little bit earlier. When you finally break out of that 50% level, again, here is that little bitty 50%, local 50%, that first stair step. that you want to kind of base something off of, right? Even if we were not smart and we just kind of fat fingered our trade back in back right here, where we finally got these days. Let's zoom in a little bit so we can see it. We got these days to finally close above it. All right. And we want to go long on the pullback to that level. We know that we want to kind of go with like a conservative high right about there. We want to give ourselves maybe a 3-to-1 risk reward ratio. Boom. And we play that. It's fast speed. We let it bandy around, let it stress us out a little bit, but then finally we're able to catch it off of that breaking level. So give yourself a stop that makes sense when you're considering your target, and we still be in that trade today. All right, let's wrap things up. You got anything else to put in here? Put it in now. I'm getting hungry. I want to take some dinner. All right, is aluminum now doing accumulation before expansion? You need to tell me the symbol. What is the symbol for aluminum? Lacking that, I'm going to bring up Alcoa, which is a materials company I know does a lot of aluminum. And, well, they are not doing doing very much business, apparently. So I don't know. Let me have a symbol for that so I can punch it in. VOW3. Oh, okay. So you must be from Europe. I don't know if I can buy Volkswagen, but yikes. You know, this week in the United States, I think the 3 major car companies, Ford, GM, and some name that makes Jeep, which I can't remember, all their workers are going on strike. You know, good for them, looking out for themselves. But I'm a Tesla owner, which means that I'm pretty elitist, and I really like my Tesla. I really like not having to drive my car. The build quality could be improved, but I think Elon Musk is going to be one of history's greatest men. And I just don't know what other car companies are going to do. I think there's too many car companies. Every time you actually unfortunately have to sit down and watch TV, I see endless car commercials. They're all the same. Like, you see the happy face of this relatable person doing some fun activity, and then you see the car driving on a nice country road, and then you see the white text come up, and it's like, buy now at something APR, and like, go into your local dealership. I was like, oh, this is why I pay for YouTube Premium. So, sell me a Volkswagen. I don't really particularly want one. I don't know anybody that has one. These are not really good trader investing things to base decisions on, but I don't see a reason to buy a Volkswagen. So, Aramex. I do see a reason to own Tesla though. Yikes. That's being pulled like gravity down to its COVID low. This is one of those where, again, like we talked about earlier, this is why you have stops. Because you broke this level here, you had an opportunity to get out, you broke this level here, had an opportunity to get out, and now you got to sit here and just let it test that low. And yeah, that's not good. I say this is my little word for it. I call this the valley of risk. That is when price breaks a major level that maybe you wanted to own it on, and you don't stop yourself out. And then every week you come back and you're like, do I sell? Do I sell? I don't know. And you just keep bleeding. You're in that valley. You're just going down. There's a big old fog in that valley. You don't know where the bottom is. So just keep yourself out of this situation and just take stops. And let's go back to AMD. I mean, that's my message there. AMD, just don't let it break that August low. Like, I don't know the future, okay? But I've seen it enough times where you get into that valley of risk. Once you break below a major level and stop out, you just, because you're in a situation here with, you need to look at this from the standpoint of opportunity, okay? Yeah, you may like the company. Yeah, they make awesome stuff. I don't even know what Aramex does, okay? Nor do I typically when I'm a price action trader. But what I do know is that if you stayed in on this break, you're now down another 34%. If you stayed in at this point, you're now down 27%. And if you stayed in once it broke this little swing low, you're now down 17% over the course of weeks and months. What else could your money have been doing better in? A savings account is really the answer. Looking for another opportunity. When you're in something, you can give it time to play out. But think about your good trades. You've had some. Even if you got one of this, think about your good trades. They may give you a little bit of discomfort when you first put them on, maybe a little bit into it. But after a while, they get profitable, and you don't worry about them so much. And then if you don't worry about them so much and you don't sell them, sometimes you come back and look, and they're very profitable. Your winners don't give you this kind of grief. Your winners don't go down 8.7%. Well, I guess those people that thought that AMC couldn't break its major low either are getting another lesson in that. Yikes. Yikes. Don't do it. Don't buy into the hype, guys. Don't buy into this. All right. TOL for a short. Toll Brothers. Candy. No, I don't want to sell candy. Candy's delicious. Why would I get... No, I don't like it for a short. And this is a good example of something that you really want long. This is something that gives you a solid break of an all-time high, pulls back, holds it here in August. And yeah, it's kind of come down a little bit. But if you want to short it when it gets down below this level, 75, 71, if that's what you're talking about for a short, sure, let's come back and look at that. If it breaks that low. I need to come up with some better filters on this, on TradingView, because they've done something to their alert system that I need to maybe make a comment about, where I get inundated with alerts on my screen. Maybe you guys get this too, because I get through my script that runs my spikes and then feeds it to my Discord. So I'll make that alert later. I gotta make a special folder for it to go to so I can see it. But yeah, if it breaks that level, set an alert basically below the August low, and then let's come back and look at Toll Brothers. RMD from Casey. All right, ResMed. Is this not one that we talked about before, or are you just now entering this? That's yeah. This is a valley of risk. This is basically it broke that it broke below the 205. Let me just clean this up. COVID low, all-time high. The levels of our time. And then you have the low that it set on that swing there. When it broke these levels, valley of risk. This is a breakout short, I like it, Casey, where you're taking advantage of the people that come in and ask me, RMD, what do I do? Well, you're in a bad spot, and you're probably just going to hold on to it and be really stressed out about it. But yeah, that's where you just kind of, if you're in a trade, you let it play out, and the way you let something like this play out is back down to the COVID low. So, just free fall. I would probably want to see some kind of a pullback. In fact, if you take from that start to there, that would be if you take the 50% from the swing in July down to here, if this is the bottom, then I would want to see maybe a pullback to there. Might be too far down for that. I don't know, but yeah, that would be the kind of thing I would look for. That would be pretty sweet. All right. All right, thank you. Oh, yeah, Andre. Yeah, that's. I hope that helps. Keep an eye on your AMD. Mercado Libre. Last one. Last one. This, if we analyze that down move, I'd presume bullish, very wonky, but it did give you that confidence of it being a level there. Messed around, came back, and now it's broken above it. So yeah, that would be one I look at there. Pull back to 113.0839 and see what happens. That would be a good structure for trades. So yeah, lots of opportunity out there, guys. Thank you. Thank you. Yeah, thank you for joining, guys. Hope you had a good Friday. Hope you had a good week. I do this every Friday. Links are below for Discord, TradingView, and YouTube, where I stream them. Thanks for spending this time with me, guys. I hope that you guys got some benefit out of it. I did. I got a list of things to look at next week. Hope you guys did too. If you have questions, hit me up on Discord. Spike Indicator, same thing. Send me your TradingView username. Trade well, guys. Have a good weekend.